Just said there's fantastic.
Awesome.
All right, so let's go. Hello and welcome to the Phil Gadd podcast. I am Phil Gadd, and this is episode number 1. So it all starts here. This is a place where I'm going to be talking to growth-minded entrepreneurs and top performers to discover how they got their start, overcame obstacles, and how they developed their success and growth. I'll be talking to a new guest every single episode. From a diverse and wide range of areas and industries. And my goal is by listening to this podcast and implementing some of the strategies that my guests describe, that will help you enable and shape your growth and entrepreneurial journey. It can be that simple. So today my guest is Rob Bain, mortgage professional. How you doing, Rob?
I'm great, Phil. Excited to be here. Thank you so much for inviting me to be a part of episode number 1. That's great.
Yeah, no, fantastic. I'm excited. So Rob's here. Rob is a mortgage professional, as I just mentioned. Rob's going to chat about how he got his start, how he overcame some obstacles, and how he is now, growing his business. We're also going to chat about the value of a mortgage broker and the benefits of being pre-approved. When you're looking to buy real estate, rates and inflation, and hopefully we're going to get out our crystal ball and talk about the Bank of England and the overall financial markets for 2022. So
Awesome.
Rob, yeah, just going to dive in. So just give me a little bit of history about yourself.
Yeah, you bet, Phil. Well, thank you. So, I think if I look back and share a little bit of my story, like, I've always been interested in finance and numbers and buying and selling things. So, I mean, for me, it was something that I've always liked to pursue. And, once I got finished school, I chose a direction in university to look at management and then ended up majoring in finance. And that really led me to my first career, which was with the big banks. I worked in different banks for about 15 years, and over that time, I had lots of different roles. I mean, it started with me at the front, basically in a junior style position, opening accounts, doing loans, investments, that sort of thing, and then progressed on to leading some teams, and I became really interested in leadership at that time. So I led a couple different teams of personal bankers. Later went on to leading a branch team, which was about 20 people, and then further developed my experience by going into small business, leading the entrepreneur center team for a little bit, and then as well some small business teams. So I mean that gave me, I guess, a large variety of experience in all different kinds of financial worlds, right? Like personal finance, business finance, some investing along the way. Through that, I ended up pursuing my CFP designation, that's Certified Financial Planner. That was a big undertaking, and I still keep my continuing ed up to date for that. So I still hold my CFP designation, even though I'm not really operating as much in that world. But I do believe, as a mortgage professional, that clients purchasing a home, purchasing a vacation property, redoing their mortgage, whatever the scenario is, I mean, your mortgage is your biggest loan that you have traditionally, right? So I mean, it's a pretty big financial piece of a person's puzzle. So looking at all that experience and education that I have really gave me a big advantage, I think, when I launched my career as a mortgage professional. And looking at my competitors and my colleagues, not a lot of them have this same background, right? I mean, they've either been in the business for a long time and maybe earned their experience that way, but none have quite that unique unique history that I have. So, you know, looking at that and looking at my business, you know, when I came in, I said, look, I want to establish my brand, you know, as a person that clients can trust. You know, I'm gonna give them accurate advice, and sometimes that means, you know, not actually doing business with them right now, and that could be for a number of reasons. I mean, maybe it's an affordability scenario, or maybe they're better off leaving their mortgage as is at the current financial institution, not paying the penalty, and coming to see me in 2 or 3 years when it comes up for renewal. You know, so it's always about giving that honest advice, because when you're self-employed and you're running your own business, you need to think about that customer and their experience, because that's what's going to lead to more business down the road. My business is built on relationships, trust, and experience. If I don't keep those goals top of mind, I'm not going to see those customers coming back. I'm not going to see referrals coming my way from their family, friends, colleagues. And really, those have been such a big part of my success that I need to continue to grow that network. When I think back to, you know, Phil, some of the things that we've worked on together with, you know, some mutual clients, we've had some great experiences, and some great stories, right? And you know, I think
Mm.
that, you know, you're one of those partners that is very important to me in my business, right? So I think that's a
Yeah.
great example right there.
Yeah, no, definitely. I think it goes both ways there. Yeah, absolutely, because you know, you gave me some advice where I was looking to do some stuff. The and Your advice was stay with the current lender. You're going to get much better deal with them. So that's what I did. So, you know, firsthand, um, you know, experience of working with you, and I think that's so true in in what I do as well. It's about relationships. Whether people are ready to buy with you today, tomorrow, 3 months, 12 months down the road. If you don't have that relationship and trust, and it's something that, you know, it needs to be nurtured. So let me sort of unpack a little bit. You know, if you could sort of unpack some of your um, success. What do you owe some of your success to? What is it you do? I mean, is there things that you have? You have a morning routine. Is there some hacks that you do to what could you like let us know that, you know, why are you where you are today? What are some of the things that you do?
Yeah, I mean, I'm a routine guy, right? Like I have, you know, my strategy that I follow, and you know, if you keep, I find that if you build a routine and you build habits, it's really easy to build those consistencies into your schedule, right? So, I mean, for example, you know, my life is chaotic, like I'm sure yours is, with younger kids, right? Like we're all over the place with dropping them off to school, different activities, sports. I mean, my family's big into soccer, music, basketball. We love the outdoors. You know, I coach my son's soccer team. My wife coaches our daughters. So, you
Nice.
know, we're all over the place because of that. I mean, I need a routine. I need habits to be able to keep myself on track, right? And for me, you know, when I launched my business and my brand, I looked back and I said, look, I'm going to create this business plan. And this is something that I learned from my time in small business and at the entrepreneur center within my previous banking roles. You know, creating that business plan and going through it and deciding, you know what, I'm launching my business. What am I going to do in the first month? What am I going to do in the first 3 months, 6 months, 12 months? Right. And really taking time to develop that business plan. And you can't write it all in one sitting. I mean, it's something that you add to and continually evolves, and you review and you change, but it's that guiding direction with those goals that I really found helped me get launched. And from
Mm,
there, once I got my feet kind of moving a little bit underneath me, you know, I further focused it in on actual measurable goals, right? So how many clients do I want to talk to this month? How many new deals do I want to do? How do I get there? What are some of the tactics and some of the activities that I'm going to do each day, that I can actually measure and hone in on to achieve those results that I want to. And I mean, the goals and the measurable numbers and different activities that you're doing, you're not always going to hit them 100%, right? Because if it's too easy of a goal, then you didn't challenge yourself enough. If it's too hard and you're never meeting it, then you easily get discouraged, right? So you need to find that center ground, and you need to build those habits. There's all kinds of different tactics out there that you can look at, from motivational speakers that talk about this stuff, to business growth experts, to whatever you want to look at. And it's different for every business, but I think that same general principle is true, where if you establish those goals, review them, routinely, maybe that's every week, every month, whatever works for you in your business, but that'll help keep you on track. And then you're going to adjust that plan as you move forward, right? Because it's never going to stay the same. You can't recycle the same one year over year, because there's so many different things that change over that time. But really having that plan and those goals and those targets has really helped me, to get from where I started to where I am today.
Yeah, that's great. I very similar. Like, I was chatting with someone the other day who wanted my advice on buying some commercial, and he had this business idea that he was looking to get up and running and funded for, and it just it brought back, like, because so here in Fernie, I I'm a realtor, but I also me and my wife run a restaurant, and we've also essentially developed the building that the restaurant's in right now. We put a commercial in for the restaurant, and then we developed upstairs for well, it was never intended originally, but we developed the upstairs where we live now. We built this. We love it. It's like a big sort of loft style apartment, with a great deck and views of where we live, which is awesome. But so yeah, going back to what this guy said, well, I'm looking to go to the BDC to get a loan, and I'm like, well, yeah, that's awesome, because that's who gave us our start. We were a young business. We started, the restaurant was actually a bakery at the time, and the opportunity came up to buy this building, which was the original. It's a funny story. It was original bakery. The bakery was originally in the building that we were looking to buy, and but it had been sort of empty for 10 years. Anyway, long story short, I pulled out the business plan that I wrote, which basically essentially enabled me to secure, I'd say, around about $1 million worth of financing to get the project up and running. And it was funny just revisiting that document. And then I actually shared it with this guy, and I said, listen, look, I'm happy for you to look at this, take it away and copy it, whatever you need to do. But this document here is basically worth $1 million. Well, it's worth a lot more now, because the building has appreciated quite well. I mean, it's been a lot of ups and downs over the last decade, but we're finally sort of coming out the side of it. I mean, that leads me on to the next thing, actually, that I wanted to talk about, is overcoming obstacles. Has there any been sort of some big ones for you where they've seemed insurmountable, but you've managed to work through them and been better for it at the other side?
Yeah, like I think anybody that wants to become an entrepreneur or a small business or business owner, I mean, they're gonna have those challenges along the way, right? That's part of the challenge of becoming a business owner, or launching yourself as an entrepreneur. If you look at statistics, that's why so many businesses and entrepreneurs fail, is because it's hard. It's not, nobody said it was going to be easy, right? There's going to be challenges along the way that are really tough to get by. And I guess the way that I've overcome some of them, because some you may not be able to get by, and they might be something that you need to plan for down the road, or whatever that scenario looks like. But for me, it's always been about breaking them down, into smaller steps to maybe climb that mountain, right? If you can't get all the way to the top right now, how are you gonna help yourself get closer to that goal, right? Are you gonna achieve this goal, then move on to the next one? Because it
Yeah.
seems a lot easier when you break it down that way to look at it. For the average small business owner, I mean, somebody within, say, my area of business as a mortgage professional, the biggest challenge is, you know, from the start when you launch that business, you're putting out a lot of money. If you're marketing yourself, doing anything like that, that all costs money, right? If you're, setting up, the business, there's costs there as well. And you're not really going to be making any money from the lenders that, pay you a commission for the mortgages that you send their way until those mortgages actually fund down the road, right? Same for you, Phil. You wouldn't collect your commission from a real estate deal until the deal closes, right? So sometimes that can be 3, 4, 5 months down
Mm.
the road. So at the start, I mean, you have to have a little bit of a fund there to be able to get to that point and to carry it forward, right? It's an emergency fund, it's a safety fund, whatever you want to call it. I mean, any business needs something like that to be able to move forward, to be able to make investments in their business, to do all of those different things, right? So it's an important factor to think about for sure.
Yeah, yeah, definitely. Yeah, I look back, and one of my biggest thing is persistence. Because I think sometimes, yeah, people don't, people just don't not understand. That's being unfair. People don't realize maybe that, like you said, how difficult being running your own business can be. And if you don't have that persistence to just keep going when you're being consistently told no, you can't do that, or no, that's not going to work, just having that belief that, and having that goal that you just keep moving towards, that's, I mean, when we first, taken right back like 13 years ago, when we were looking to get our first business in Fernie, there's so many obstacles that were thrown in our way by like the city and all sorts of things. And yeah, we could have easily said, oh yeah, that's fine, we're not going to do that. But you just keep pushing forward, and having the belief that whatever people are telling you, just having that belief that you can achieve it. I think it's one of the biggest things that I've taken away from my journey as an entrepreneur, as a business owner. And I had a thought. There's a great book I'm just reading at the moment. It's called "The Hard Thing About Hard Things," and it was written by a guy called Ben Horowitz, who basically started a .com company in the, just before 2000, and his journey of selling it to Hewlett Packard for like 1.65 billion. But it's a really interesting book, and it's crazy that, being a CEO of a company like that, some of the things that, almost, sent them under, but, you just keep going and you just keep pushing forward. So yeah, I was just a quick one before we actually move on to the second part of the podcast. Is there any books that you favorites? Anything that you like reading, would recommend?
You know what? Like I don't read a lot of books myself. I've never really been a big reader, but I do enjoy some podcasts, and
Oh
somebody
yeah,
that I tune into most days that kicks off my mornings. I'm not sure if you've heard of him before, but Darren Hardy. He's more of a success mentor and motivator. But
right.
he has these short videos every morning. They kind of give you some things to think on, and really energize you for the day, right? So when I'm first getting on in the morning and starting my coffee kind of thing, I'll usually put him on and listen to him in the background. And really, that's my routine, I guess. Back to that question, one of the routines that I have. That's how I usually start
Okay.
off most days. So I enjoy that, and reading different updates on the markets, of course, is always interesting as well, and the crazy things happening with the Bank of Canada these days. I know you said the Bank of England at the start of the call, but I don't know too much about what they're got going on. Just the Bank of Canada. So
There you go. That's my old habits slipping.
yeah,
Slipping. My old homeland slipping back in there. Yeah, no, absolutely. No, we will talk about the Bank of Canada. But before we get into all that, I just wanted to start by, we've obviously worked together, a very valued partner in my business. I've really comfortable and confident whenever I can send people to Rob that they're just going to get looked after, and not only just looked after, they're going to, it's almost like having, someone, a real strong member. Go back to soccer. I played a lot of soccer until recently. Actually, I think I've hung my boots up. I'm getting a little bit too old, but no, it's just having someone that that you can trust, that you can send people to. So yeah, like from your point of view, Rob, what is the value of having a mortgage broker? What can they provide? What value can they provide? And we can move into also the benefits of having that pre-approval before you start the process of buying a home in Canada.
Yeah, definitely. No, and that's a great question, Phil, and thank you for all the kind words about how we've worked with lots of clients and really established that partnership. I think it's definitely the same perspective from my side as well. It's been great to have you as a partner there too. So thank you for all of that. Thinking about of a mortgage professional, mortgage broker, really they do the work for the client so that the client has that expert assisting them to really get them the best mortgage product possible for their given scenario. There's lots of different benefits to using a mortgage professional, but the ones that I think stand out the most, again, is that expert advice that you're getting from somebody that does this each and every day. That's their job, right? They have access to many more lenders. A client could choose to do a mortgage with their bank. They're going to get products from that specific bank, whereas a mortgage broker has multiple lenders. Like we have over 50 that we deal with. So there's lots of lenders within Canada that do just mortgages, and you're not going to find them with a building on the corner, in your town or city. They're just available to mortgage brokers to be able to send that business to them, and then that customer becomes a customer of theirs. So having that more diverse, larger number of lenders often leads to a better product or a better rate. And I say better product because there's lots of different products out there, right? There's mortgages that have fixed rates, there's mortgages that have variable rates, there's mortgages that have adjustable rates. There's lines of credit that are secured by properties, and there's some other options as well. So really, again, that mortgage broker knows all of that, and is able to help guide the client through that process to really get what's best for them. Then I guess the second part of that question, talking about pre-approvals, when a client is looking at a house, and especially in today's market, it's highly competitive, and houses are selling so quickly that really the sellers are paying close attention to those offers that are coming in, and lots of properties have multiple offers being submitted for them. So how do you make your offer stand out compared to the competition? Because if you really want to get that house, there's multiple things that are looked at there, right? Of course, offer price is one of them. How much are you willing to pay for it? What's the possession date look like? What kinds of conditions do you have? Are you pre-approved? So what a pre-approval is it's different because there's two terms out there. There's a pre-qualification and a pre-approval. And you'll notice that often banks or lenders use those two words interchangeably, and they mean two different things. Pre-qualification is a very simple form of a pre-approval. It's looking at a client's income, but not actually looking at paper documentation of their income, just looking at what they say they make. So client A makes $75,000 a year, and says that their credit score is 700. and they have $20,000 down payment. So then the lender says, yes, you're pre-qualified for a $250,000 mortgage or whatever that number is. But they don't actually look at the client's credit history. They don't actually look at the pay stubs or letter of employment. They don't actually look at the full application. Whereas a pre-approval is looking at all of those pieces of information. So when I do a pre-approval, I generally don't do pre-qualifications because I don't give them that much value. I only do
Right.
pre-approvals where the client fills out my application. I look at their credit history. I look at their income documents. I ask them more details about where the down payment is coming from. And I look at that full financial picture for them because I want to make sure that when I say they're pre-approved for this amount, that they really are pre-approved for that amount, so that if they do find a house, make an offer with Phil or whomever, that they are able to complete the purchase of that property. So a pre-approval has a lot of value.
Yeah.
To tie it back to the start of that conversation with, the offer to purchase and the competitive offers in today's market, when a client can say to the seller that they are pre-approved for X amount of money, that seller then knows, well, this client's already talking to their bank. This should be an easier process for us to move forward with the sale. And it's likely that they're going to be approved because they're already pre-approved. And
Yeah.
I know, Phil, you and I have talked about this with a few scenarios as well, right? Where
Yeah.
you've liked to have clients pre-approved, and maybe you can add your perspective from your side of the equation on the realtor side on why that is valuable.
Yeah. Yeah. Absolutely. I mean, you know, I think just the last sort of, well, most of this year and probably a bit into last year, there wouldn't have been a point of not being pre-approved going into an offer situation. The biggest one, really, we've seen so many situations where there's multiple offers happening, and sometimes I've, in the last 6 months, sellers was saying, well, then if they're not cash buyers, then I don't want to know anyway. So the competitiveness of the market has just been ridiculous. That's definitely changing at the moment. More and more offers are now not multiple offers, but there's no point, in my opinion, in going to look at a bunch of houses if you have no idea if you can afford them. Not only if you can't afford them in your own mind, but if the bank's actually going to lend you money to buy them. So, I mean, in my mind, it's I don't typically I don't work with buyers unless they have a pre-approval. I'll give them a window of opportunity now. Before, I would be like, there's no point in not having the pre-approval. Now I'll maybe meet them. We'll go and look at a property or two. But if they haven't got that pre-approval done within the first week, then, that's not the end of our relationship, but we're wasting each other's time. So from my perspective, having someone like yourself, I can go, as soon as they say I'm not pre-approved, I'm like, speak to my guy, Rob. And we've had some great successes with that. One thing I want to just touch on, I know we've had this conversation before. It's about, when clients were pre-approved and when it was crazy, trying to get that condition length on an offer down to the smallest amount of time we could. I mean, I know, and I've had a situation just recently, 2 different buyers, they were going directly with banks. Both clients were first-time buyers. I sat down with them before we even started looking at houses and just kind of, talk about how everything works. And they said, look, are you pre-approved? Yes, we're with a bank. Would you like to speak to my guy anyway? He might be able to show you stuff that, your bank hasn't got, like you mentioned earlier. They chose not to. But one of them, I was very specific about, communicating with the bank, because we went into a multiple offer situation, and because they'd been chatting with the bank, and I told them that they needed to be ready to, remove that condition in less than 5 days if they could possibly do that. That bank in that situation worked incredibly well. We actually removed that condition in 3.5 days. On the flip side of that, it was a different bank and different buyer. I didn't have quite the same. I didn't get a chance because we moved very quickly to have quite the same conversation. So he didn't really have that communication with the bank. We put 5 days in. We had to extend the condition because the bank didn't get to it in time. From your opinion, what's your thoughts on stuff like that? The having the condition length. Is there a typical time, or can you do enough sort of in advance to shorten the length of that condition time down considerably?
Yeah, that's the key right there. Is, it's the communication between the client, the realtor, and the mortgage lender, broker, all talking to know what's happening with that scenario, right? If somebody's going in with an offer and it's a competitive environment and we don't have a lot of time to meet that condition, and we need to make it short to keep that offer competitive, then I would try to collect majority of that documentation or verification that I needed from that customer ahead, so that I had most of that already on hand, so that we're ready to go when that offer gets accepted. Whereas if we don't collect a lot of that, don't do a pre-approval, and we're starting from scratch, it's pretty darn tough to meet a short condition window with that scenario. It's also subjective a little bit to the property itself as well, and really what that client's down payment is, because if you've got a CMHC insured mortgage, that you're not going to need an appraisal or something like that on the property done because CMHC is going to value it, then we don't have to worry about that appraisal getting completed. Whereas on the other hand, if the client's coming in with 20% or more down payment, and we need to get an appraisal because the lender wants one, then we're relying as well on what's the availability of that local appraiser, right? And sometimes I know with some of the Fernie scenarios that we've had, that appraiser can take, they're booked for a week already in advance. So I mean, they're not even going to be able to get into the property for a week or a week and a half. So it doesn't matter how quick we move on our end. If they can't get in there to do the valuation, then the lender's not going to give the final approval, because they don't know what the value of the property really is, because the appraiser hasn't been able to finish their report yet. So then we're waiting a little bit of time for that. And I'm not kicking on appraisers at all here with that comment. Don't take it that way. I mean, the market was busy, right? It was a volume scenario where there was so many properties being bought and sold that the appraisers couldn't keep up with the demand because of that, right? So it's just it was just so much happening at the same time.
Yeah, absolutely. Yeah, I think probably the key I take away from that is always communicate as best you can with with the professionals that you're working with. I always find that no matter what situation, the more communication you have, I find it's best for everyone.
Definitely.
All right. Well, so rates and inflation. I know that's a hot topic of the news at the moment. Rates are going up, as is inflation. What's your kind of take on it? What are your thoughts for the rest of maybe 2022?
Yeah, so there's a lot to look at with the rates, and really what's happened since you could say the start of 2022, because that's really when things started to move up. I mean, looking at the predictions overall for 2022, lots of economists were saying we're going to see higher energy prices, we're going to see supply chain disruptions, we're going to see the economy maybe move a little bit in the direction of repairing itself, but inflation is going to be a challenge. So most were saying to stay diversified, be defensive as far as what's going to happen with rates. And now, really where we're at more recently, as far as some May numbers, inflation reached, I think it was a 39-year high of almost 8%. It was in the high sevens. So I get asked a lot from clients, really, how do interest rates and how do inflation, how do they correspond, or how do they work together? And really the easiest way to think about that is the Bank of Canada is moving up interest rates because that'll encourage more of us to save because we're getting more money, we're getting more interest on our savings versus borrowing because it costs us more to borrow. So, when you look at it from that perspective, if you're borrowing less and saving more, that means you're reducing your spending. So, in response to that, everything that's for sale out there, the prices of it are gonna slow down and possibly even decrease a little bit. So then that's where you see that reduction in inflation, right? Because inflation is the cost of goods. So if we continue to see interest rates rising, which we're likely to, I think the last prediction that I heard for this mid-July Bank of Canada announcement is going to be, they're saying 0.75%, so 0.75. So
Right.
that'll lead to all the lenders, all the banks increasing prime by likely 0.75%. So all variable products are going to go up, and fixed rates. If the prediction continues to be that the Bank of Canada is going to continue these increases, we will see fixed rates as well start continue to move up. So the big question I always get is, well, what should I do? What should I do for my mortgage, Rob? And I mean,
Yeah.
that's when I reach over to the corner there, Phil, and I pull out that little crystal ball, and I see no. But I mean, I can't predict that far into the future, right? I mean, we know
Yeah.
that prime is going to continue to rise. We know that's going to lead to fixed rates going up. So I mean, I always turn it back to my customer and I say, what are you okay with? What's your interest rate tolerance? And what I mean by that is, are you okay? If we think about variable products, are you okay with an interest rate going up, and that meaning that your payments are going to go up? If the prediction is that we're going to see further increases for the remainder of 2022, and 2023 and on is unknown, what if it continues to go up? Are you okay with that? Can you afford that payment increase? Or are you more comfortable knowing what your rate's going to be fixed for the next 5 years and having that fixed payment for that amount of time to get us through where we're at right now? And you can budget based on that. Like which one of those options seems better to you, right? And then
Mm.
whatever conversation happens after that, or whatever their gut tells them, that's generally the way that I will recommend they go, because then it's them making the decision based on how they feel, not me making the decision for them. I don't make the decision because I can't predict the future. I don't know what's going to happen, right?
Yeah. Yeah. Cool. No, it's true. I mean, it's a very similar question when people ask me about house prices. But one thing I think there is a bit of a quandary about is, like, we've had low interest rates for so long. I remember going back, like, pre 2005, 6, 7, just before the big meltdown in 2008. um I had like 6, 7% on some savings in an Icelandic bank account. So I would sort of say, interest rates are moving towards more of a normal place. But the trouble is, house prices are nowhere near what they were in 2006, 7. So that they're incredibly high. If mortgage rates keep going up, it's that questionability of affordability, isn't it, for a lot of people? So yeah, it's going to be an interesting one, I think. So I mean, I know we don't have a glass ball. It'd be amazing if we did. It'd be very. I wouldn't be sitting here. I'd be on a beach somewhere, drinking drinking pina coladas. So yeah, I'm going to get it right this time. Predictions for the Bank of Canada, not England, and the overall financial markets for the rest of the year. What do you think? If you were a betting man, what would you say is going to happen by, we're in 2023. How's it all looking?
Yeah, like I mean, my prediction, if you rewound time about 3 months ago, I was predicting that for the remainder of this year we were going to see prime rate increase by about 1 to 1.5%. We've almost already achieved that at this point in time. We will have, once July the July announcement arrives, right? So that I think it's even going to be more than that,
Yeah.
along with predictions of fixed rates for the 5 year getting up to about 5% to the low 5% mark, and we're also already there pretty much right now too. So,
Mm.
you know, the scary part is that the Bank of Canada, has done these rate increases, and we haven't seen much change with inflation yet, right? It's still in that zone that is too high.
Yeah.
So the only way to defend it more is to continue with the rate increases, to push that down. But the way that you said that, that last statement there was totally correct, right? Like getting back to that normal area of interest rates, right? I mean, we've been in such a low rate environment for the past however many years, where we're used to and conditioned to, rates of 3% and 4%. Those are low rates.
Mm.
It was nice while it lasted, but that doesn't mean that that's the normal, right? So we're maybe headed towards more of a normal, at this time. And if you talk to any clients that had, a mortgage back in the 80s, or back, a fair number of years ago, they'll often tell you stories about 15-20% rates. I'm not saying, don't get scared, I'm not saying that that's where it's going, as far as what my prediction is, but
Yeah.
there's we're a far ways away from that as well, right? So where is that normal number? Well, I think we're headed there, and I think that, what, if you're getting into a mortgage, and you're looking at a renewal or something like that for the remainder of this year, at least you should be ready for some more increases to come.
Yeah. Yeah, it's interesting
Interesting to
to see how it'll play out because even in in the 80s, yeah, interest rates were um, very high, but um, probably the actual total of the money borrowed was nowhere near the sums that you're seeing today. So for example, you might have had 80 or 40 to 80,000 at 15-20%. That looks very different on a mortgage of 300,000, 400,000. So I don't know. It'd be interesting. It's the Bank of Canada, or the banks all over the world, I think, have a very interesting job to do this year, and it'll be fascinating to see how it all plays out. But what I can do and what you can do is just keep giving the best advice to our clients
to our
and
clients.
helping them navigate through it to give them the best services possible. That's always kind of my goal, really. um all right, cool. Well, yeah, some really, really interesting insight into, how you got going, how you've developed your business, and how, it's become successful for you. Um, have you got any sort of closing comments before we head off here?
Closing comments. I guess it's great that, to be a part of this podcast again with you, Phil. I think it's a great idea to have the entrepreneurs and business owners really share the story of their journey, because we can learn a lot from each other. And some of those challenges, and really, some of the ways that, they have been overcome, right? And really different tactics that everybody uses to take their business and their brand to that next level. So I'm just, I was happy to be here today, and I look forward to see what, the future episodes that you bring.
Yeah, awesome. Yeah, yeah, it's a journey for me as well. So we'll see how it goes, and I'm sure a bit rusty on episode one, but I'm sure I'll get better over time. Well, hopefully, anyway. Um, One last thing. Your information's been scrolling across the bottom, so I'm sure people have seen that. If you want to get hold of Rob, if you have some questions about mortgages, what's the best way?
Yeah, you bet. I'm happy to chat with anybody, questions, mortgage related, whatever they want to chat about, as far as mortgages go. I'm always available. You can reach me on my website, robbain.ca. That's probably the best way to find me. It's got all my contact info, email listed on there. I'm also on Facebook, LinkedIn. If you Google me, you'll find me that way as well. Rob Bain Mortgage Team. So.
Awesome.
So
Awesome. All right, Rob. Well, it's been a pleasure chatting as always. So this is all for episode 1. Please join me next week where we will be chatting to another growth-minded entrepreneur.